Cryptocurrency trading strategy. Okay, so this is a strategy that can work for you regardless of whether you're in a bear market, a bull market. It doesn't matter what kind of market that you're in. This strategy will work as long as you choose projects that have a long-term future. And I'll talk about that in a moment, how to find those sort of projects. And this isn't considered investing advice. And I wanted to let you know that I originally was going to do a video on how to make a deposit on Binance, but I'm going to show you a little bit later in this video why I've decided to hold off on that until probably tomorrow. But I wanted to do this video. I've been thinking about doing this one for a while, and I find that there's a lot of people that overcomplicate investing in a cryptocurrency or developing a cryptocurrency trading strategy. And this is a very simple strategy that anyone can use. So the first thing is we're going to talk about is what to buy. Basically buying, when to buy, when to sell. So what to buy? So the criteria that I like to use when it comes to purchasing cryptocurrency, let me just say this. Most people, when they're looking at trading, they're overemphasizing profits and they attempt to try to have a crystal ball. And it's unfortunate because even if you go look on YouTube at all the people that talk about technical analysis, is talking about trading, almost all of them have been so horribly wrong in the past year. Now, everyone likes to argue that they're wrong because we're in a bear market, the market's getting manipulated, et cetera, et cetera. I would bet you that most people are horrible at picking direction of markets anyway. And the goal is not to pick a direction in a market. The goal is to be able to find projects, cryptocurrencies that you think have a long-term future. And if that's the case, if they do indeed have a long-term future, then ultimately the market should go up. Now, this isn't investing advice for you. This is individualized investing advice. This is what I use when I am looking at projects that I want to be able to invest in. So, for example, I look at things like when it comes to the criteria, I'm looking at things like, do they solve a real world problem? Like, does it have a real problem that has mass appeal? And the broader the appeal, the bigger the problem they're solving, the better off. But it needs to be able to actually have a shot at solving that problem. There's a lot of cryptocurrencies out there. If you go to the websites and you look at their white papers, they got this massive roadmap and they're like, trying to change the entire world. But one of the things you want to look at is there active development taking place? And are they moving towards that strategy in some sort of real sustainable way? One of the projects I've talked about in the past is like Substratum, for example. Substratum is looking to create decentralized internet. The reality is they are a very long ways away from actually accomplishing that. However, this isn't a project that I've invested in, by the way, but if you look at Substratum and you look in their community, they do have very active development. They are constantly doing upgrades and updates, and they are moving. They just have a very long ways to go, but they are actively moving in that direction. So active development is something that you want to make certain that you see on the project. And now, part of being able to know there's active development on the project, one of the things you can do is go to GitHub. And if I have to explain to you what GitHub is, it may be over your head. So another thing that you can do is you can go and you can come to CoinMarketCap. And you can do something like, I put up Litecoin here. You can go to Litecoin and you can look at their message board. And that's usually on Bitcoin Talk. Is it being updated regular? People talking. You can go to chat. This is typically like the Telegram groups that they have where developers will sometimes and community members will be chatting back and forth. You can also come to social. And social is going to show you like their tweets. You're going to see like what's going on Reddit. And so you're going to see a lot of active communication about the projects, and you're going to be able to at least get some idea of what's going on there. And oftentimes the communities are very friendly, and you can ask a lot of questions about the project, what's going on. And ultimately, you can find your way to GitHub, and if you have questions, these are the areas that you could go to help you get your questions answered. Although I got to warn you, anytime you're in a community like this, take everything with a grain of salt. Don't take anything as gospel. Just know that everybody's biased in these communities. They want to see the projects do well. They want to see the projects go up. So that's totally normal, and it's to be expected. But so do your own diligence, but you can definitely use the communities as a part of that diligence. And I like to see an active community. There are projects out there where there's nothing going on in the Telegram group. Nobody's actually talking about it. In my opinion, that's not a good sign. They can have the greatest technology in the world, But if they are not able to get people interested in their technology, then it doesn't matter. So I want to see active development. I want to see an active community. I really like to see an active developer communication. So if the developer, and I think a great example of that, by the way, is something like Ethereum. Ethereum has, Vitalik is always on, Twitter tweeting things. There's always things going on. The community is extremely active, but Vitalik's very active. The entire Ethereum project, all the developers are extremely active, and many of them are active on Twitter. Some of them may be active in the communities. I don't know. I don't follow their community a whole lot. But in other projects that I follow, the developers are active in communicating inside of the community. And that's really what I like to see personally. Now, I don't necessarily get caught up if the developers are, and that's not a make or break, by the way, if the developer's active in the community. First and foremost, I want to see the developer actually developing. So as long as the community is talking about their developments, that's important. I don't necessarily care who the developer is. People get caught up like, do we know who that is? Are they anonymous? Are they real? I personally don't care because Bitcoin, nobody knows who the developer of Bitcoin is, but the project works, the community's in active development, it's always moving forward. That's the most important part personally for me. So is it a real world project? Does it solve a real problem? And is there an actual use case for the token? Does the token need to be used, and does it have a somewhat of a unique use case? The more unique it is, the more I like it. And so there are certain projects that the token's actually not really needed. Some parts of XRP, XRP is not needed for Ripple. Now, the Ripple makes it extremely convenient for banks and financial institutions to use XRP, but in most places, XRP is not necessarily needed to be able to use Ripple. So that's a plus for some people. It's a minus for others. You get to make your call. You get to make your decision. I actually have a video where I talk about the potential problems for Ripple. I'll put a card above. It was an extremely popular video on my channel, which got probably the most dislikes of any video that I've put on my channel. But that's just because, of the people who like Ripple didn't like the video. So it's totally understandable. But at the very least, Ripple is a working project. There are a lot of projects out there that aren't working. So that's what you want to keep in mind. Active development, active community, real world problem, real world use case. And then the other thing to look at is, do they have a marketing strategy? Not every project has a marketing strategy. And again, this isn't a make or break sort of thing, but take Dash, for example. Dash, where's Dash? Dash, they have an entire marketing arm, essentially. They have a full-on massive marketing strategy. If you cannot find a way to get people to learn about your product or your technology, again, it's hard to find people to become attracted to your product or your technology. So keep that in mind. I love to see projects that have a good marketing strategy in place. Again, that's not a make or break sort of thing. If they have an active community, the community will do their own marketing, their own word of mouth. But I definitely like to see active marketing strategies in place that are actually working. So the secret characteristic, let me just come back over here. I have a bit of a secret characteristic when it comes to what to buy. I favor, again, this is not a make or break, but I favor projects that have a passive cryptocurrency component, like Masternodes, like smart contracts, for example, proof of stake coins. And now you have to be careful when you look at projects like that. One of the issues with these potential projects, let me show you this. One of the issues with some of these projects, for example, Dash. Dash has a Masternode coin. It's the largest Masternode coin worth, I think that's $70 billion. Let me see. I don't even know what it is. What is it for Dash? Is that the market cap? Okay, so the market cap for Dash is $604 million. $604 million, not 70. Oh, I know what I was looking at. Sorry. That 70 is, I think, the price of the Masternode. Yep. $70,000 is probably the price of the Masternode. Or is that the price of the coin? Shoot, let me look. Oh, it's the price of the coin. Duh. So the price of the Masternode. Oh, $70,000 because you need 1,000, so that would make sense. $70,000 for the price of the Masternode. But don't you need to worry about the price of a Masternode just yet. I have a whole nother video on my channel where I talk about Masternodes. However, just know this. This Dash pays out a 6% annual ROI, like a 6% interest, but they pay out a lot more. Diamond pays out 22%, Luxcoin pays out 34% a year, BlockNet pays out 14%, Monetary Unit pays out 33%, and it goes down. LRM pays out 700%, that's not a typo. SkyHub pays out 669%, but in these sort of situations here, you want to be very careful with those coins. They're typically illiquid, or they're going to use inflation basically. It's going to devalue the coin. So you don't want the coin to be devalued. So typically, when you get into crazy high percentages, then that's not a good thing. But I like to look at coins that have a good that have some sort of a passive component. So let's just take Dash for example. Let's just say that it went down. Let's just say over the course of the year it goes down 30%. Well, it can go down 30% on the year, but if it makes 6%, then you didn't lose a full 30%, right? You lost what, 24%? Heck, if it goes down 50% and you make 6%, you didn't lose 50%. You lost 44%. But what I like about it is, more than anything, the ROI, and I typically want higher ROI than this, but the idea about the ROI, the passive income that you can earn, the great thing about that is you can cash that out and it decreases your risk. So for example, smart contracts like Proof of Weekends. Proof of Weekends is a project that's very interesting. It's a smart contract on the Ethereum blockchain currently. And so what happened, well, that's where it's at, not currently. But what happens is every time they buy or sell a token, every time you buy or sell a Proof of Weekends 3D token, there's a 10% fee. That 10% fee doesn't go to an exchange. It's distributed among all of the other tokens to the token holders, or it's distributed in Ethereum as like an Ethereum dividend or an Ethereum payment to all token holders proportional to the number of tokens they hold, whether they hold one P3D token or they hold 1 million P3D tokens. It doesn't matter. They get a percentage based on the amount of tokens that they hold. And that's paid out in Ethereum. So they can cash out to fiat, they can hold it in Ethereum, they can use that Ethereum to buy more P3D tokens. It doesn't matter. What that payout does though is it offers a little bit of a cushion. So for example, if Bitcoin goes down tomorrow by 10%, you're not going to get paid anything. You're not going to get paid a half percentage point. You're not going to get paid a quarter percentage point. If Bitcoin lost a tremendous amount of value. It was up at $20,000. Well, if you were holding it at $20,000 and you continue to hold all the way down to $4,000, well, you're just out. You're basically out. What's that? $16,000 per Bitcoin. But if it paid, let's just say that the whole time it was coming down, that you made a percentage of 2 or 3 or 4% on the fall, then you didn't lose the full, 16,000. You actually made 2 or 3 or 4% against your losses. And you can use that to either buy more Bitcoin because you believe it's going to go up in the future, or you can use it to buy another project, or you can cash out and hold it in US dollars if you wanted. So I love projects that are able to pay a kind of a passive cryptocurrency. You'll notice it's a common theme on my channel. It's not required, but I like projects like that. So there's Proof of Weekends, there's HDX20. I love this one. This one's awesome. They don't pay you an actual fee, but what you do is you get it in the value of your token. So no matter if people sell the tokens or buy the tokens or whatnot, the token price continues to go up. You can't lose money. The great thing about projects like Proof of Weekends, like HDX20, is if you believe in the long-term viability of the project, and it does in fact succeed long-term, it's a double win. Not only do you win if the price of Ethereum goes up because you're priced in Ethereum, but you win because the token prices go up on Ethereum as well. And not to mention, in both cases, the price of Ethereum can go up 10%. Well, you could make another percent or 2 or 3 just for holding the token because it's a smart contract that pays a reward. And I've covered that ad nauseum on my channel before. And if you want more info about that, just subscribe to my channel and I'll be certain to be covering it as well in the future. But so I really like, that's kind of my secret characteristic, kind of my secret weapon. I love when they are able to pay a passive income like Masternodes, proof of stake, smart contracts. In the future, Ethereum is going to be proof of stake, which means they're going to start paying just like Dash does. They're going to start paying a Masternode reward. So you could own a project like Ethereum, and just for owning the project, you could have the potential for price appreciation long term and earn a passive income just for holding it. So that's incredible when you stop and think about it. I mean, I think that's absolutely incredible. So that's the characteristic. Now, buying strategy, and then we're going to move into when to sell. So the buying strategy, the best strategy when it comes to buying is dollar cost average in. Now, when I say dollar cost average in, I do use an indicator, and I'll show you the indicator, and we'll discuss that in a moment. I don't mean arbitrarily just buy in. I mean have a plan to buy in every week or every month in small amounts of money that don't cause you financial stress. And the reason this is good is because nobody has a crystal ball. Studies have shown, there's been studies, you can look them up, that there's a 50-50 chance tomorrow that the market goes up or it goes down. And we're talking about like traditional stock market. Long term, I believe cryptocurrency will have the exact same evidence. There's a 50-50 chance that tomorrow it's a red candle or a green candle. Tomorrow it's a red bar or green bar. It goes up tomorrow or it goes down. 50-50. Now with that being said, if there's in a bull market long term, like cryptocurrency is going up long term since their inception, because the inception was zero. So obviously it goes up on average a little bit more than it goes down on the up days. So a lot of times people are trying to pick the day. They're trying to use the strategy that gives me the most shot at success tomorrow. Like I want to pick the bottom. I don't think you can really pick the bottom. I think the best strategy is knowing that you don't have a crystal ball, and long term, do you believe it's going to go up? Long term, if you believe it's going to go up, it doesn't matter as much about what happens tomorrow to the price at all. I will agree psychologically, it feels better if the price goes up tomorrow, but it's our emotions and our psychology that we have. It's our emotional psychology that we have to fight against. It's that greed and fear that's constantly at play. Am I making the right decision? Am I making the wrong decision? So if you make a decision to buy every month or to buy every week or to buy twice a month or whatever, every paycheck, but $50 in cryptocurrency or $100 or whatever, and you believe in the long-term viability of the projects that you're investing in and the long-term viability of the market as a whole, then you should be fine. Ultimately, it's going to go up if you're right. And like I believe, literally, Bitcoin is going to go to like $1 million per Bitcoin. I literally believe that's going to happen one day. Literally. So I don't care as much what the market does tomorrow. In fact, if it's cheaper tomorrow, then great, it's cheaper for me to get in. With that being said, I do use an indicator. What is my indicator? It's price. So there's a saying that says, let me show you, buy on red, sell on green. And what it's talking about is when there's a green day, that's the time to sell. What most people do is they're like, oh no, the price is going up. Crap, I've missed out. Let me jump in and buy more. That's why the price keeps going up for a while sometimes. And what happens is people buy here, but the price keeps going up. And then they buy here and the price keeps going up. And then the price tanks and they bought in way towards the top of the price movement. So the idea behind buy on red, sell on green is about getting in at a cheaper price point and having less risk. Logically, that makes sense. Emotionally, it can be challenging. So let me just show you that in action. I mean, it's hard to argue with this logic. So let's just say day one, just hypothetically, is today. Right here, I'm trying to move my mouse around. I don't know if you can see this here. Right here, the market goes up 10%. Tomorrow, it goes down 5%, which we illustrate here. Day one, it goes up 10, it goes down 5. What does it do on day 3? Would you have been better to buy here or to buy here? Well, if you bought on a green day at 10%, there's always this fear that you're going to miss out, like it's going to just skyrocket to the moon and you'll never see a pullback. And that's possible, but that's not most commonly what happens. Remember, there's a 50-50 shot there's going to be a pullback. You're not going to see 100 green candles in a row. I don't think that's ever happened. There's going to be a time when it pulls back. And most often, you got a 50-50 shot, it's going to pull back the next day. Yes, you can string a couple of days, good days together. But as a rule of thumb, it's better to buy down on a red day, which, by the way, is why I'm not doing a Binance deposit video today, because I'm going to buy in for Bitcoin, and currently I'm holding a stable coin, and I don't want to hold US Tether. That's a whole nother video for another time. So I don't want to, I'm waiting till I'm ready to buy Bitcoin before I make a deposit on Binance, and I'll show you how I'm going to do that in another video, maybe tomorrow if we have a pullback tomorrow. In Bitcoin, I do like to see a 5% or more pullback. But think about this for a moment. If it's a green day and tomorrow's falls by 5%, if you'd have bought today, then you'd have lost 5%. But if you buy on the red day, then what happens if it goes up? Well, if it goes up, again, we don't have a crystal ball. We don't know what happens. If it goes up, that was far better than buying right here. You got in cheaper. So you made money when it got back to the previous day, and you may continue making money. But let's say that the next day the price goes down. It don't matter because you bought on the down day, so you actually lost less money. And when the market turns around, it doesn't have to go as far for you to hit break even. Now we're oversimplifying this, but rarely, the only time that it makes sense to buy on a green day is if you have a crystal ball and you think the market's just going to keep going up, going up, going up, going up. This is what caused people to buy in at $20,000 Bitcoin. I believe Bitcoin's going to $1 million a piece, but I said on this channel, you know, when Bitcoin was even at 15,000, I said on this channel, we're probably going to see a pullback, and we could see a significant pullback. Why? Because anytime in the market you see huge price movements really, really fast, that means that you can always see swings the other direction just as fast many times. So I'm not saying to, you know, I don't necessarily believe in buying on green days, and I don't buy on green days, especially when you talk about larger coins like Bitcoin and Ethereum. I don't buy on green days. So with that being said, I like to buy on red days. And so if it's a red day tomorrow, I'll be making a deposit on Binance, and I'll be showing you that. Let's just wait and find out and see what happens. So when to sell? When to sell? The best strategy for selling. The best strategy for selling is only sell if you think the project is losing steam, like it's becoming stagnant, the developer stops developing the project. That usually only occurs on your smallest, most riskiest projects that the development may stop, where there's only 1 or 2 developers. So if you think development either stagnates, they're having trouble moving the project forward, or the developer quits, or you don't think for whatever reason, you feel like the project, the token project isn't going to work. Anytime you think the vision for the project fails, the purpose of the project fails, or something wrong with the use case, those are all reasons to sell. The other reason to sell, and the best indicator for selling, is not green days and red days. The best indicator for selling, yes, you can sell on a green day, but the best indicator really is your profit. If you still believe in the long viability of the project, then there's no reason to really ever sell. If you still believe that the project is going to be viable long term and the technology is going to be worth something long term. However, I do think it's wise to always be willing to sell and always take some profit. Now you can determine how much profit you take. You can take profit. So here's my strategy. I dollar cost average no matter what, even if I am taking profits. I know that sounds weird. Why? You may be saying, well, why are you trying to pull profits out, but you're still willing to dollar cost average in? It's just about having a strategy to follow. It's about having a trading plan in place. So if I know that I'm putting in, you know, $100 a month or $500 a month or $1,000 a month, but if my minimum, whatever my minimum is, I'm going to keep putting that money in, even though I may take some profits off at the same time. So if I know the first of the month, I'm looking for my first red candle day down below 5% if it's Bitcoin, for example, then what I'll do is I'll wait until that day happens, and it's my first opportunity, I'll buy in. Now, I may be dollar cost average in, knowing that I'm also taking profits. Let's just say hypothetically, I've gotten in Bitcoin today at, 3,500 or whatever it's at today, and in 6 months, 2 months, it's at $10,000. You can choose when you want to take profit. You may decide when you double your money, you want to pull half of it out. It depends on how much risk. Pulling your money out, selling out for a profit is never a losing strategy. It's a greed strategy to think, oh no, what if it goes up and I miss out? That's greed. Safety is never a bad strategy. So if I see that I've made profit And maybe, you wait until Bitcoin goes up to, if you're buying at 3,500, maybe you're waiting for it to go to 8,000. You need to know where you want it to go. And at that point, you need to start pulling profits off the table. And I don't mean sell for 3,500. Maybe you pull out $500. And maybe next month, if it goes up a little more, you pull out a little more. At some point, you've got to take some profits off the table. Why? Because it's that profit. We're in a volatile market. The market can go up, it can go down. It's that profit-taking strategy that will allow you to buy in later if the market drops. So if you've been pulling off profits, and so let's just say that you'd pulled off 25% of your profits when Bitcoin was at 19,000. Well, today, if you were able to buy back in, and let's just say you decided, I've got these profits sitting over here on the sidelines, I'm not gonna dump all that money back in the market now because it may go lower. But you might decide to double your dollar cost averaging amount, allowing you to buy in more cheaper, not knowing if the market is going to go up or go down. I absolutely recommend that you never make single huge lump sum investments. Build a position. Ladder in and ladder out of a position is another term that's often used, which means have a strategy to buy in slowly, have a strategy to take out profit slowly. Because you don't have a crystal ball of the market going up or down, the only time that I would dump a project and pull all my money out is if I had genuine belief that the project, I've heard the developer abandon it, whatever. A lot of people, if they heard Vitalik, got killed in a car crash, that actual rumor actually was real at one point. If they find out, meaning it was just a rumor, but that was a real rumor that circulated earlier last year. If someone finds out that, oh no, Vitalik got killed in a car crash, well, that might be a reason to consider dumping all or most of your Ethereum if you did not think the project could go on without Vitalik. Now, it's worth saying that Vitalik has said the project could go on without him, that it has very little of his day-to-day input. And so with that being said, if you believe that, then that might be a good time to start dollar cost averaging into Ethereum if you weren't, just because it would tank. If something happened to Vitalik, Ethereum price would most likely tank. So with that being said, today what we've covered is we've covered what to buy, when to sell, and the best indicator. You don't have to worry about complicated technical analysis. This takes the stress out of your cryptocurrency buying, out of your cryptocurrency investing. Having a good, solid cryptocurrencies trading strategy is important. Create a plan, follow your plan, and do your best to keep your emotions out of it. If you can keep your emotions out of it, and if you love the technology and you believe in the long-term fundamentals of the project, then there's no reason to believe that ultimately the market will prove you right and the projects will be going up. And if you don't believe in the project and you don't believe in the technology, then you should stay out of it and you should never invest in it at any price, because I believe it's the technology in the long term, the technology fundamentals in the long run is what will prove you right when you're investing in cryptocurrency. That's just my thoughts, my beliefs. This is my cryptocurrency trading strategy. Let me know what you think down in the comments below. I would love to hear from you. If this has been useful for you, please give me a thumbs up. Thank you so much for watching, and stay tuned tomorrow or the next day. Whenever we have a red day and Bitcoin's down 5% or more, I'm going to make a buying video, a Binance deposit video. So stay tuned for that as well. Thank you so much for watching.